Welcome back to Bunnex Investment Group. In this video, I'm going to teach you a 5-minute trading strategy which falls under the category of scalping. I come across a lot of traders asking for this particular trading strategy. So if you are one of them, this is your answer. So in this particular video, what we are going to learn is going to cover the required indicators for this particular strategy. We are also going to learn the indicators arrangement, how you are going to look for an arrangement for you to get an entry, then price action positions for buy and sells. Since it is a scalping strategy, it's basically going to fall under in and out trading system whereby you are not going to stay long within the markets. Then I'm going to give you a strategy description so that you'll be able to comprehend everything that I would have talked about. Then entry criteria, then market examples, and last but not least, we are going to talk about the trading discipline mantra, which is something that is very, very important for traders who want to take this business seriously. All right, so basically the first topic is going to be the indicators that are going to be required for buyers. For buyers, we are going to require EMAs. A lot of trading strategies or basically scalping strategies utilizes EMAs, and like all those, we are also going to use our normal EMAs that we use on this particular channel. These are the 50 EMA, the 200 EMA, and basically the 800 EMA. So in this particular case, I've put my colors in blue, and then this is going to be white on the charts, and this is going to be dark blue on the charts, so that we will be talking the same language. So please proceed and set up your chart in this particular scenario, and I'll actually give you and provide you more EMAs that you are going to add when we jump over the charts. All right, so basically these are the EMA arrangement that we are going to look at. In this particular case, this is the 800 EMA, and this is the 200 EMA, and this is the 50 EMA. So basically you can see that there is a crossover of 50, 200, a crossover of 200, 800, and they have created this particular rainbow. So this rainbow is basically saying 50, 200, 800 in order, or basically it's actually telling us that the daily or the intraday time frame is down, the weekly time frame is down, and the daily time frame trend is also down. So this is the arrangement of EMAs that you need to see before you take any action. It's either they are actually giving you a rainbow to the downside, or they are actually giving you a rainbow to the upside. So in this particular case, this is the price action position for sales. So when we actually have an arrangement of EMAs like this that are actually pointing to the downside, we actually can now look for sales. And the price action position, or basically where the candlesticks must be, they should be in this particular region. So when the market gives you price action that is below all these EMAs, like in this scenario, we will be looking to short the market in our scalping strategy. And then this is the position for buys. As you can see, the market, the EMAs are now actually pointing to the upside like that. And when price action is above, we actually be looking for buys like that. In and out to the upside, in and out to the upside. No need to swing or no need to stay much longer within the markets. As we've said, this is going to fall under the scalping strategy. Right, so basically, let's now describe the strategy, how you are going to be taking positions and where these positions are going to come from. So scalping is an in and out trading style, like what I've been saying or before. We actually enter and we exit, and we are not looking to get too big or trying to eat a very big piece, but to just get in and get out. We are going to ride on established trends. That is the first thing that I've mentioned. You need to see the markets actually trending to the upside or to the downside, and to see the price action being above or below, as I've shown you. The time frame will be the M5 chart, and that is the time frame that we are going to stick on. I come across a lot of people in the comment section saying, can I use the M15? Can I use the H4? Try to stick to the rules of who has taught you a particular strategy. Or you can as well experiment on yourself and check if it is viable. So the first thing is to identify the position of the price action. Is it in a upward bias or in a downward bias, or the price action is actually telling you to look for buys or to look for sales? It's up to you to see the price action. Then if the price action is below the EMAs, then we are going to be looking for sells. And if the price is above the EMAs, we are going to be looking for buys. So basically, this is the strategy description that we need to know before we take our entries. Let's now talk about the entry criteria. After confirming the side of the price action entries, one must be done. Any entries must be done at 1 minute time frame reset points. What are those? These are clearly defined when we jump to the charts, because on this particular slide I cannot show you. But what we want to see are 1 minute time frame reset, and I'll show you what 1 minute time frame reset looks like when we are viewing on the M5 time frame. So as I've said, it's going to be shown on the charts. So let's jump right over the charts for examples. But before we do so, check out my free Telegram channel. I'll leave the link in the description box below. All right, so this is USD against MXN. What we are looking at is basically an M5 time frame, where we've said the first thing is to see the position of the market, right? In this particular case, we can see that the position of the price action is right above. It's right above the EMAs. This is 50, this is 200, and this is 800. The one in red is 13. The one in yellow is the 5 EMA. So this actually shows us that we are going to be looking for buys since the price action is right above. So we want price to be above these EMAs, 1, 2, and 3. When it is above all those EMAs, then we start to look for an entry. So like in this particular case, we can see that the market came from this particular point, went to the upside, and after going to the upside, it came back to the 50 EMA. Whenever the market comes to the 50 EMA on M5 time frame, we call it an M1 reset point. So it made an M1 reset point at this particular point, and then it continued to the upside. Our entry trigger will come after a retest of the 50 and then candle close above the 13. Like in this particular case, our closure actually occurred at this particular point and the market went to the upside like that. Look for 1.5 R after the stop loss is determined by a position below the structure, basically like that. Let's have another example so that we can see, especially if we see a sell example, so that we can see how you can or how you are going to apply. So in this particular case, we are at a live market. We can see that the market actually went to the downside, and after going to the downside, we can see that it came back and retested the 50 EMA at this particular point. This was actually a point where we could have made an entry since we are actually satisfying all the rules for a sell. We've said the price action must be below. It must be below all the EMAs like what it has done. 800, 200, and 50 EMA like that. And then it came back to retest, closed below the 13. And then at this particular point, if you will be still in the trade, you'll be looking to at least scratch out and take whatever that you have obtained, basically like that. Let's have another example so that it can be something that we can apply more and more. So we know that there is variation of the theme whereby the market makers will try to shift and induce some other things that are different from what we have already known. So in this particular case, the price action is right above, but there was no M1 reset point. And then it came to this particular point, but we cannot make any trading decisions whilst price is still below the 50. But when price comes back to the 50 and then closes above, we can actually make our entry. So in this particular case, we had several points of entry since the market was actually retesting. We had 1 to the upside, we had 2 to the upside, we had another 1, 3 to the upside, basically all these being points of market entry. And there are points where you are going to lose. And in this particular case, you can see that we had a point whereby the market came back to the 50, closed above, but the market failed to keep on going, but later came back to the downside like that. So these are also points which actually occur within the market. So basically that is how you trade. And now let's jump right over the trading mantra so that we will be able to apply this with a strong conviction and less emotional. All right, so like what I've said on the outline, we are going to talk about the trading discipline mantra, which actually governs us how we are aware of ourselves when we are trading. So for this to work, you need to put in effort. And as I always say, not effort of working hard, but of being aware of your emotions all the time. You are going to be someone who is actually wise in terms of how you are going to conduct yourself. Be aware of what you are thinking at every instance when you are trading. Triggering an entry is the easiest job, but waiting for the right separates the real traders from the dopamine chasers. So if these setups are difficult for you, try the top 1% traders course explanation, which I've left in the description box below. On that note, see you in the next one.